Happy Tuesday, Maverick Traders. This is Rob Reinhold. It is December 10th, and let's jump into it. In this session, we're going to be talking about what happened today. We're going to take a look at all the markets, and we're going to see where all those currencies went, all the cryptos, and of course, we're always looking for setups pairing up the strongest against the weakest.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so we got another pullback in the market today. But overnight, we got a lot of news in currency land. We had the RBA. They came out and basically pulled back their hawkish tone on inflation. About 3 months ago, the RBA kind of surprised the markets and said, hey, we're more hawkish than everyone thought. The whole time, the RBNZ in New Zealand was much more dovish. So we saw the real change between the Aussie and the Kiwi, and the Kiwis just kept falling. But over the last couple of weeks, the Aussie has fallen as well. And now we got the RBA basically saying, hey, you know what? We are now probably closer to easing than we thought 3 months ago. So we did see some selling from the Aussie dollar. And in addition, we also got some news out of China, not specifically out of the Bank of China, but the government said that they are vowing to move to an appropriately loose policy, meaning that they have more stimulus coming, lower interest rates. That's really going to negatively affect the countries in that region, which is primarily Australia and New Zealand. So that was kind of like a double whammy last night as far as the RBA and the Chinese government. So we saw just a small fall from all-time highs in equities. Really, we'll take a look at the S&P chart. You'll see really not a big deal. But there was some good movement in the world of currencies. This is what we like to see in a day. So we had the strongest currency, the pound, weakest currency, the Kiwi. There was almost a 1.5% difference between these two. There's a lot of pips to be made in that. Even something like Aussie CAD, we had a full % of difference. This is a decent trading market. Now, I've been in a Kiwi Swiss franc trade for a while short, and it has continued to work out for me well, but the dollar out of the three currencies of safety ended up being the best for today. If you remember what we talked about in the weekend trading room or the working in currency room, was these five are likely to be strong, these two weak. With the CAD, we had no really idea where the CAD was going to be. It was leaning a little bit more strong than weak, but we really focused on pairing these on the long side against these on the short side, and you can see that's exactly what happened today. Equities did have a small pullback, 0.3%, but you can see the international markets had a little bit more of a pullback, like 0.2%. Crypto down 2%. We'll take a look at the cryptos. They've had a monster run, and a pullback is definitely a responsible thing to do here. Gold had a nice day, oil flat on the day. And as far as cryptos go, I think that a down day tells you more about what's going up than up days. And this is what I mean. When we have selling come into the market and things sell off, we really take a look at how much they sold off in relation to the rest of the market sell-off. So if you were to take, what happens when the S&P goes down 0.3%, I think in the past you could say crypto probably went down about 1 to 2%. It's a much more volatile asset. And you can see that Bitcoin and Litecoin, they hardly went down, where Bitcoin Cash and Ethereum actually had much larger moves down. This right here, when things go down, I think it really tells you more about what's going up than when you have upward price movement. So Bitcoin and Litecoin are still my favorites on the crypto side. Let's take a look at the stock market. Let's take a look at the charts. And here we were at a +3 and we are still at a +3. When we take a look at just purely everything technical, we have a new swing high, new all-time high. And at all-time highs or at any swing high, you get one of two things. You either get bases, which this still could be technically until we break 60-20, or it could be a pullback, which then we go into a deeper pullback, maybe down into this area. And then ultimately the 50-day moving average is the ultimate level of support. Taking a look at where we are right now, we are still above this last swing high. This is telling me that this is just a pullback at this point. Now, if this 60-20 breaks, then all of a sudden I have to abandon the fact that this is a high base, and I have to say, okay, we have a deeper pullback coming. The next level is the 20-period moving average, but it might even go deeper than that. But until then, we have to just assume that this is an uptrend and that this pullback is going to be bought and it's going to bounce. We cannot go short or be bearish until those things happen. If we do that before the technicals tell us, it means that we're projecting. It means that our biases are saying, oh, well, let's get short because of what? Because you didn't like the election, because, well, whatever. You fill in the blank. It doesn't matter. It's all just your projection and bias. Being a technical trader means you trade the technicals and you stay with them regardless of what you think inside. And then once the technicals change, you change regardless of what you think inside. That's the point of being a technical trader. Let's take a look at what we have over the next 24 hours. So we do have big announcements coming up tomorrow morning. We have the US CPI coming out. They're looking for 0.3% in both the headline and the core, 2.7% year over year. That's right in line with where the Fed wants it to be. We also have Bank of Canada coming out. They are supposed to make a 50 basis point cut. Likely that's what we're going to get. But we'll take a look at the CAD chart. The CAD's been going up. The market is now believing that this is the last cut the Bank of Canada will do. If the Bank of Canada confirms that, I don't think there's a ton of upside in the CAD from that news, but I do think that'll put it on some more solid grounds as far as most likely going higher over the next couple of weeks. If they come out and they say that there's more to come, the CAD's got quite a ways to fall because it has been bid up with the expectation that this is going to be the last one. And then if you are trading Aussie, we have employment report tomorrow night, but I will let someone else take care of that report. Let's go in and take a look at the currencies. Let's score them +3 to -3 and pair things up. I'm going to start out with crypto here because I really just want to show everyone what's going on. This is Bitcoin, and we all know that it broke through 100,000, and we've had a couple of times it's poked its head up against it, but it's having a hard time holding above that 100,000. I've talked about this over the last couple of weeks being very, very typical when you hit these milestones. You know, I remember Dow 20,000. I remember S&P 1,000. I remember the first time Apple hit 1 trillion in market cap. When these things happen, there's really just a sigh. We reached it, and then there's really no buying after that. But you can see that no one's selling Bitcoin. There's just a lack of buying. I don't know how long this lasts. I think this lasts pretty long. I like to look at how long the run was versus how long the base is going to be. So if we take a look at just these numbers here, we really got the breakout back here in late October. So late October, and then we broke through this high, let's call that December. We're looking at 1.5 months. I could easily see a base here for 1.5 months, and we're about 1 month into this thing, maybe only a couple weeks. I still think this has a couple of weeks to base here. So I'm not really excited here about going long crypto. Is there anything better than Bitcoin? Well, Litecoin is the other one that's on my list. Had a big run, but big pullback. You definitely could be looking at Litecoin right around the 100 area. Now, of course, we don't want to buy it when it's falling like a falling knife because, you know, that means you could have bought it anywhere in here. We want to let things bottom out, which is kind of what we got on today's candle. We got this nice doji all the way down to like 101. If we can get some green tomorrow, I think it's a decent play. I don't love it because I think the whole crypto community, but all the crypto coins are in a pause instead of a expansion. We like to get in when things are expanding, not when everything is pausing. But if you are taking a look at a crypto trade, then Litecoin is probably your best bet off of a bull pullback on a shorter term chart. Coming into a 4-hour chart, you can see things have not changed yet. Yes, we have RSI coming off the bottom, but we do not have a turn in the EMA. We want that EMA to start turning higher. We want this parabolic star to break. So definitely too early on everything in crypto. So for me, crypto, I'm just a pause. Let's go through Forex, and I'm going to go through very quickly here and just talk about trends. So here is yen. It is sideways, slightly trending down. I'm looking for things that are moving. Here we have dollar. Dollar is trending strongly. We are running into some overhead resistance here in the dollar. So while I like the dollar, I would really like it much better once it broke through that high of the past 3 months. Swiss franc, also looking really good, also heading into some overhead resistance. We've backed off of this. I really like this in the fact that we've backed off of this high. We're coming down into support levels. Here's the problem. When we take a look at all of the indicators, it's really just saying sideways at best. We like to jump in when things are actually showing strength. Euro is showing strength. So at this point, Euro to me is the best looking trade of what we've looked at. So Euro to me looks good. It's not steep, but it's breaking out of this base here. Could have a really nice run. But if I come over here to the pound, I'm finding something that's really running with a lot of momentum at the moment. We do have some overhead resistance, but we still got some room. I think you have to put pound on the top of the list with the euro second on the list. Then when we take a look at growth currencies, here's the CAD. The CAD has had a little bounce off the bottom, but we're still seeing more trending down than up. It's a flat. It's a +1 or a 0. That's all it is at the moment. Not excited about it. Aussie has definitely been downtrending, but take a look where it is. We had this big bounce, then we had the news from the RBA, and now we're just basing. Now look, this is just fine. This is a 4-hour chart. This is a 24-hour base that we're looking at. These can be some powerful moves. So for me, I do like Aussie, but as far as right here, right now, it is more sideways. Where is the momentum to the downside? Well, you guessed it, it's in the Kiwi. Definitely more downside momentum in the Kiwi. We're coming into some support levels here on the Kiwi. Any bounces should be sold here on Kiwi. I would love to see a base. Would love to see a base here and then a fall. I think you can still be short Kiwi. Like I said, I've been short Kiwi for a couple of days, and I think you can still stay short in the Kiwi. Here's our current velocity scoreboard. You can see the pound is actually showing the most momentum, followed by the dollar. Dollar's got some overhead resistance, followed by the euro. So these are my 3 currencies I'm looking for over the next 24 hours. I do like that euro breaking out of that high base. I think it's got some more upside potential than like the dollar, and maybe even the pound. What is on the short side? Well, not interested in crypto, so it's really Kiwi. So there's really only one trade to me, and that's going to be Euro Kiwi is my number 1, pound Kiwi is my number 2, and Kiwi dollar is going to be my number 3. Let's start with my favorite one, Euro Kiwi. All right, let's take a look at the daily chart. All right, we do have some overhead resistance up here in the 182.40 area. So the 182.40, that's 100 pips away. So we do have enough. That's about 0.6%. So we definitely do have enough potential upside until the next level. Where are we on a 4-hour chart? Well, you can see here, we've had a pullback and then a run. We're now hitting up into these highs again. What I would love to see, and this is where I always say, if I could design the trade, and I really love to say that because what that does, it puts your mind in the moment. In the mindset of building a trade. So for me, I would say if I could, script out what happens on this trade, I would love to see a pullback. I would love to see a pullback over the next, let's call it 10 to 12 hours. I would love to pull back right into this area here on this lower trend line. And, maybe here in the 180.50 area, 180.60, 180.70, somewhere in this area. I would love to get that pullback, and that's where I would love to enter on an ascending triangle to a breakout to the upside. I have no idea if that's going to happen, but you see how when you put together this, if I could script it out, you're no longer just reacting to the price action on the screen. You're simply saying, okay, this is my perfect setup. If it doesn't meet this perfect setup, then I'm going to just take a rain check and look for something else. You could also say, you know what, if we break through this high at 180.50, where it is right now, I'm going to take a long position. I don't think, it doesn't have quite as much upside as waiting for a pullback, but it's still a very, very good. Decent trade to the upside. It's got about 0.5%. That's a little light for me. I don't like to go after 0.5% moves. So for me, I'm not interested in that setup. I'm only interested in the pullback and the bounce. I want to get it down here in the between 180.50 and 181. That's really where I want to be able to take that position on a pullback. You could also take a look at pound Kiwi. Again, this is exactly what is likely to happen if that Euro Kiwi breaks. Same thing, where it was having a little tough time at this level and then it broke through. I think this is a little too far gone. Let's take a look at Kiwi dollar. All right, Kiwi dollar actually looks pretty decent here. The fact that we have broken below some support, and you can see we're getting a little bounce back up. Any bounces should be sold on this. Kiwi dollar looks okay, but for me, Euro Kiwi is the number one trade. So we think that Aussie and Kiwi weakness will continue. And that was a question last week because they were weak last week. And the question was, hey, are they going to continue to stay weak or are they going to bounce? We said they're going to continue to stay weak. Here we are. We have weakened. At some point, they are going to bounce, but I just don't see it over the next 24 hours. I just don't see it. So I think you can stay short those two currencies. And then euro, dollar, and pound definitely look the best on the long side. Thank you so much for joining me. That is the currency recap.